Hey everyone, and welcome back to the channel. Today we're diving into the world of crypto fear, and yes, maybe a little greed too. You see, the fear and greed index has been flashing extreme fear lately, and that has investors feeling all sorts of ways. But what exactly is this index, and should you be hitting the panic button or the buy button? Let's break it down. What is the FGI, the Fear and Greed Index? FGI is basically a mood meter for the crypto market. It assigns a score from 0 extreme fear to 100 extreme greed based on a bunch of factors. We're talking things like how volatile prices are, how fast they're moving, what people are saying on social media, even surveys of investors themselves. Don't be fooled. The limitations of the FGI. Now, the FGI can be a handy tool, but it's not perfect. Here's why: subjectivity. The way they weigh these factors can be a bit subjective. A sudden surge in social media chatter, good or bad, could swing the score more than it should. Self-fulfilling prophecy. If everyone blindly follows the FGI, it can become a self-fulfilling prophecy. Extreme fear leads to panic selling, which actually makes the market worse. Short-term focus. The FGI is all about how investors feel right now, not necessarily where the market is headed long-term. Extreme fear might be followed by a quick bounce or a longer slump. It depends. Addressing misconceptions. The FGI is not a crystal ball. Let's be clear. The FGI is not a magic 8-ball that tells you the future. It's a snapshot of sentiment, not a guaranteed prediction. So, what does extreme fear mean? Okay, with that out of the way, what does this current extreme fear reading mean? It suggests investors are nervous, maybe due to recent price drops, regulations, or bad news. But hey, don't panic. Historically, extreme fear has sometimes been followed by big rallies. By big, interpreting the fear friend or foe. Here's how to approach extreme fear. Maybe the market is oversold, presenting a potential buying chance for long-term investors with a high risk tolerance. They believe the fear has driven prices too low and are betting on a future rebound. But hold on. Extreme fear doesn't mean an automatic upswing. Things could get worse before they get better. Be prepared for the possibility of continued price drops. Looking back, how did extreme fear play out before? Let's see some real-world examples. The FGI hit extreme fear during the COVID crash in March 2020, but a major recovery followed over the next year. This is an example of extreme fear preceding a big rally. Another extreme fear reading came with a market correction in May 2022. The market did bounce back, but it took months. This shows extreme fear can be followed by a delayed recovery. The bottom line: don't fly blind. The FGI is a tool, but it shouldn't be your only guide. Do your own research, consider your risk tolerance, and think long-term. Extreme fear might be a buying opportunity, but be prepared for the possibility of further decline. So, what do you think about the FGI? Is it a helpful tool or just market hype? Let me know in the comments below. And don't forget to like and subscribe for more crypto content.